Global financial firm Morgan Stanley has revised India's economic growth forecast upwards for the coming years. The firm now expects the Indian economy to grow at 6.2% in FY26, up from its earlier estimate of 6.1%, and 6.5% in FY27, revised from 6.3%. Now, this upward revision, according to Morgan Stanley, is supported by the de-escalation of US-China trade tensions, which is expected to marginally boost external demand. However, the report makes it clear that the primary reason for India's growth will continue to be its domestic demand. It notes that internal economic momentum remains strong, especially amid persistent global uncertainty. The brokerage added that government policy support in the form of easy monetary policy and capital expenditure-focused fiscal policy will help sustain this momentum. It said macroeconomic stability is also in a comfortable zone. Now, on the consumption front, Morgan Stanley sees the recovery becoming more broad-based, with urban demand improving and rural consumption already showing strength. On the investment side, public and household capital expenditure and currently leading the charge, while private corporate investment is expected to gradually recover. On the policy front, the firm anticipates that the Reserve Bank of India will continue with a deeper monetary easing cycle, especially as inflation is under control and growth remains moderate. Meanwhile, the Reserve Bank of India has projected India's GDP growth for FY26 at 6.5%, slightly more optimistic than Morgan Stanley's revised forecast of 6.2%.